Evelyn, welcome to the show. Good morning to you, and thanks for joining us. This is one that I think we've all been looking forward to in terms of hearing what they have to say on earnings because, well, one, it's one of those FANG names. It's the first of these big tech companies to report. But how do you follow up last quarter after those absolutely incredible subscriber numbers?
Hi, guys. Yeah, thanks so much for having me. Right. So Netflix does report earnings today after the bell. And, Netflix has really become known as the ultimate stay-at-home stock. I mean, this company brought us all Tiger King at a time when we all really needed it. And it definitely seems like it was so long ago, so much longer than it really was. But yes, Netflix reports earnings this afternoon, and the company previously forecasted revenue growth of about 23% year over year for the quarter that just ended, which it reports on today. And it also expects an additional 7.5 million new customers. But yes, we did see last quarter's earnings were really, really great. And the company does still expect to see some strength coming out of this past quarter, even though a lot of other companies are getting hit hard. But I do want to say, and this one comes from a Twitter user named Gary Mack. And Gary Mack says that if Netflix released a documentary as good as The Last Dance every week, I would never leave the house. So The Last Dance is the Michael Jordan biopic that, pretty much everyone across the world seems to have watched. And it averaged about 5.6 million views across all 10 episodes when ESPN first aired this back in April. So ESPN and Netflix signed a deal that gave Netflix global on-demand rights, which means that Netflix has been airing The Last Dance globally, receiving a very high audience. And then also this weekend, it will release The Last Dance, all 10 episodes, I believe, on Netflix domestically. And so while the show was incredibly popular, both on ESPN and on Netflix globally, I mean, this type of popularity isn't really sustainable as a partnership like this is unlikely to happen again, especially since, ESPN is a Disney company and Disney Plus and ESPN Plus have both come out since then. But I want to go ahead and transition to our next tweet of the day. And this tweet is from a user named Delia. And Delia said, "Is anyone still using Disney Plus? It's so boring because after a while, you realize they just have a bunch of exclusive movies and that's it. Definitely not like Netflix or Amazon with all their original content." So, Delia's personal opinions aside, what we do know across all of these big streamers is how pivotal this original content is to them. And Netflix has said that the global film and TV media production shutdown won't really affect its quarter that ended in June, which again, it reports on this afternoon after the market closes, and because most of their films and TV from 2020 and 2021 have already been filmed and are in post-production right now, just being finished up. But guys, my question for you both is I'm wondering how this will affect Netflix, in 2022 or the years down the line, because it seems like they're missing out on, the opportunities right now to get ahead, to start making, this original content for the future, which, will probably harm their competitive aspect in this space, and potentially their stock price as well. Guys?
I'll take this one, Alex. Netflix, the problem with production growth and new content, the good news is for Netflix, that's everyone's problem, right? No one can bring out new content right now because all the production studios are shut down. The two questions lingering over Netflix for this earnings is this. If you're not on Netflix now, will you ever get on Netflix, right? There's one. And the other one is every bit of good news that could possibly be disseminated by Netflix already reflected in the price of the stock? That's what traders have to decide about today as this earnings about. Obviously, the growth numbers are all over the board. It's 12.5 million. It's 10.5 million. There's a range there of how many subscribers they're going to add. There's really good numbers from international as India doubled their subscription, Japan tripled, and Indonesia quadrupled their subscriptions. So the growth is there. The new products, new releases they're all kind of in the same boat. The real question is, has the stock run too far, too fast, guys?
Well, and Kevin, as we say goodbye to Evelyn, which she leaves us with some interesting thoughts here. As we say goodbye to Evelyn, thanks, Evelyn, for joining us. We want to welcome in Landon Swan to help us clarify this. Landon, of course, the co-founder of LikeFolio.com. Landon, I'll just kick it to you with this. I mean, Evelyn gave us some interesting kind of perspective from the tweets regarding Disney Plus and whether or not, it's all it was cracked out to be. But when you look at this, Landon, listen to this. Netflix market cap on our heat map here, 226 billion. Disney market cap, 214 billion. So is Netflix truly the king of content now? And does Disney have to hand over that crown?
Yeah, I think that Netflix is clearly the king of original content. As Evelyn pointed out, they've got a ton of legacy stuff, but just like that Twitter user says, once you've seen it a few times, or your kids watch it a lot. I know, Kevin, that we talked about this, how the young kids like to watch stuff a lot. I can't count how many times I've seen Frozen in the background in my house. But yeah, you can only watch things so many times, at least as an adult. And original content is absolutely king. Netflix is the king of that. They're doing extremely well. We've got fantastic numbers for them. We've got new subscriber mentions at 34% quarter over quarter growth, which is fantastic. We know that, cancellation mentions are down despite the fact that subscription fatigue is up. So people are tired of having to have too many services, but they're not canceling Netflix. So it's a fantastic place for them to be. And you can kind of see here, it's a chart of 4 different services: Disney, Netflix, Hulu, and HBO Max. And you can see that when Disney was launched, Disney Plus, that is, when they launched, they brought everyone with them. Because you're getting a Roku for the first time, and you're like, hey, I got to get this to get Disney, and there's all these other things I can subscribe to, and so they lifted everyone up. And then, of course, with quarantine coming in, streaming was big. It was absolutely monstrous. You had to have something to do. So this is going to be a huge quarter for Netflix because of all the people that had to stream during quarantine. A lot of people signing up for the first time. And as you can see from this chart, of course, they've pulled back from that big spike, but they're still the king. They still get the most mentions. HBO Max had a nice launch there, but, nothing like Disney's. And so very interesting chart. And overall, we know this is going to be a big quarter from Netflix. But I think when you talk about, have they run too far, too fast? If you would have asked me Monday morning, I might have said yes. But, then they sold off about, 8 or 9% on Monday. And so now they're back around 515. Very volatile stock. I would say that I'm buying on any kind of significant dips. And that's where I'm at with Netflix. Very bullish long term and just looking for good buying opportunities.
Landon, when I look at your presentation and your graphs, the first thing that jumps into my head is competition. There's competition there, but the second thing that jumps into my head is Netflix seems to be extending its lead over the competition and frankly doing it better. And their international growth is gargantuan. And it looks like though the U.S. growth, obviously the pandemic has done amazing things for their U.S. growth. But you're right, Landon. I mean, this stock a couple days ago was a runaway. Now it's come down from the 575 level to the 515 level. So now, I mean, just a couple days ago, you're right, it did look expensive and crazy. And now it looks, well, frankly, a little less crazy. But here's my question. Does it appear, as your graph shows, that Netflix is, number one, resting at higher numbers than it did before the coronavirus, right? The spike, and then it comes down, but at higher numbers. And number two, is it extending its lead over these companies? Remember, these companies are big hitters, Landon, but Netflix seems to still be winning.
Yeah, they're definitely big hitters. And I know that Disney is going to figure it out over the next few years, original content. I have no doubt that they're going to come out with a lot of really good series. But I don't think it's necessarily a question of Netflix or Disney or HBO Max. People are willing to pay for multiple services. The prices are low enough at $5 or $10 a month that you can have many and still be under what your cable bill used to be. And so I see them as being the number one. To answer your question, they seem to have a fantastic head start, and they know how to create fantastic original content. So I only see them extending their lead, but I don't even worry that they have to, because I think it's one of those rising tide situations that's going to lift all boats, and they just happen to be number one in a fantastic market right now. We look at that quarterly chart of the fiscal quarter mentions, and I know this is supposed to be a record revenue quarter for Netflix, and we've got it as a record purchase intent for Netflix. So we are in complete agreement with the street. I think everyone knows that they're going to put up a really big number this afternoon after the market closes. Of course, the current quarter, that one on the very far right, that's only just a couple of weeks in, that is much lower pace because the quarantine is sort of over. But this is a subscription basis, subscription company. So when they get all those people coming in over the last 3 months, they're going to discover a lot of fantastic content, and they're going to keep going with Netflix. So this is a chart of people talking about signing up for Netflix. So this is revenue in the bank for years to come. Really strong numbers out of Netflix. Again, very bullish, just wanting any kind of pullback to get more shares.